All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off as usual with the S&P 500 here. We did make two new all-time closing highs, one on Thursday and Friday, although volume's very putrid pretty much all week and has been for the last couple of weeks. What we're seeing here is it's volume that's normally we're not used to seeing until August. It is summertime, but typically we don't see this type of light volume until like really the dog days of summer. So there's a lot of complacency going on, and this is just such a very atypical breakout, if you will. You see the line here, which is the previous all-time high. We closed above that, and typically when you have a new all-time high, you see it move like this here, impulsive, and there is a little bit of volume behind it, and that lets you know that you're on breakout. But this one's just, it's almost like the market's kind of just limping into breakout. Now we do have OPEX next week, and it is a quad witching OPEX, so there's probably going to be some games played by institutions, and we'll see what that brings. But it's just a very, very odd breakout with not a lot of breadth, and it kind of goes along with what I've been saying, is that we're running out of steam here. Typically, I'm not a big MACD trader, but I do want to show you a little bit of a macro view here on the S&P 500. So we can see the MACD here clearly diverging from price as we make new all-time highs. You can see the same thing on the Qs. And the Qs have a much, much bigger divergence. If you go onto the weekly chart here, so just clean this up, see how it's been diverged for quite some time. Each time we make a new all-time high, we're losing more and more steam. So I do think, again, in the second half of 2021, we do have to be very careful in the equity markets. And just going back here to the S&P, the main thing you need to pay attention to is this rising wedge pattern. So you have this trend line coming here, basically to the March lows, basically kissed it in November, and now you've tagged it a few times. And then you have the topside trend line, which you started in October, that is now starting to converge with the lower line. So I think max upside, I am looking for a blow off top type move, which would mean possibly another push higher. And I think you could get as high as maybe 430, 432. And then once you come down, once this line breaks, it's sort of the floodgates opening. And when I talked about breadth earlier, for instance, the Dow transports, this is one I've been talking about for weeks now. If we look at the weekly chart, we finally closed below this inside bar low, and that's now a failed pattern. So we will expect a move at least to the 20 moving average on the weekly chart, which, I mean, is, considerable distance away. But with the markets on breakout, the transport should be also following, as well as the home builders. Home builders have been strong really since March as well. And, again, reversal. He had this topping tail reversal, push down, inside bar, move lower, another inside bar, move lower, another smaller micro inside bar, and then we moved lower this week, closed below this. And so the home builders also showing some weakness here. If we look at the weekly chart, you had that engulfing reversal. I tweeted this out, said, hey, the home builders are going lower. You had this engulfing reversal on the weekly. That's a dominant pattern, and you can see them coming in now. Another stock that's been beat up that had a great last 18 months or so is Caterpillar. Caterpillar getting whacked pretty hard this week with good volume, and this has been a strong name. Look at the weekly chart here. I mean, you found some support at the 20 moving average, but this is a pretty big reversal with good volume on the weekly time frame. So there's some weakness here in sectors that should not be weak on when the market is on breakout. Now there has been a few pockets of strength though. Semiconductors have held up very well. They actually could probably push up to test those all-time highs, and cloud software as well has been doing nicely, although it is into some resistance here at about 375. Reason for that is yields. Yields have come in. I'm sure everybody's aware. Yields have been getting hit over the last week or so. But really, this doesn't change anything about my thesis. I think yields are moving higher eventually. We just have to get through all this consolidation here. This is a lot of resistance. Anybody who was long yields here is now a seller because they're break even. And you know, when you're in pain this whole time and you finally get to break even, you're like, oh, cool, I'm not in pain anymore. So you start to sell. You try to get out and break even. So really, honestly, I'm not worried about this little pullback here. If we look here, I have this fib set up for us. Honestly, we could pull all the way back to 1275 and it would just be a 382 retrace. So really nothing wrong with the yields chart pattern here. This is all just choppy, sloppy consolidation. I'm thinking in the next probably 2 months or so, that would be when I'd be on lookout for yields to move higher. Switching over to crude really quickly, same kind of deal here. So yeah, crude did push higher. It got above 70, which I was not surprised about. But again, if you look at the larger time frame, on the monthly chart here, we're coming into all this resistance, all this chop here, and the 200 moving average. Again, believe it or not, there's people who are stuck in this trade and have been stuck in for some time, and they will flip into sellers. Now, I'm not expecting crude to crash or anything, but it's going to need to do some consolidation to work through this pivot here. So that's what I'm looking for in the crude markets. Let's move on to gold really quickly, and then we'll talk about silver. So gold pulling back a little bit this week. Again, the dips have been bought pretty quickly. Friday came back in and we didn't really have any buyers, but it's typical for Friday to be like that. The institutions tend to leave early in the morning, so the big money isn't really in play. But yeah, gold holding up really well. Again, just needs to pull back and consolidate and back and fill a little bit, but ultimately gold looking to move higher. I did pick up some Agnico Eagle this week as a swing trade. This is a nice chart pattern here. Bullish consolidation above all the moving averages and looking ready to pop higher to get through this 74, 75 area. Ultimately, you get up to this gap fill at about 84. So love this chart pattern here. Loving the gold miners right now. Speaking of the gold miners, let's quickly flip over to Sprott Inc. I want to take a look at this chart really quick. And Jason did an article on this, I think a week or two ago, about how Sprott has outperformed the miners and how it is a very good leverage investment to the price of precious metals. But anyway, so we had this huge up move here, worked off this overbought condition, made another thrust higher, and now we're working off another overbought condition. So this thing is very, I mean, it's definitely outperformed, needless to say, and it looks to be correlated to the price of the silver squeeze, the Reddit silver squeeze. If you notice, where it started breaking was right at the beginning of February, which is around the time that they were talking about doing the silver squeeze. So I think it was like right around here, February 1st. If we look at silver futures, it was right in that area where silver futures popped. The thing is, Sprott is actually not manipulated. And so it's more sensitive to the price of physical silver. So this is a very interesting little story here. And if we look at the bigger time frame, switch over to Sprott. This is on Trading View. It's a little bit easier to see. It's all this chop here. This is very thin volume. I almost like disregard this because it's so thin, and it's just basically when the ETF was first, first issued. So I mean, it's almost, you could almost say, if you want to argue, that it's basically at all-time highs. But it's very interesting how this is correlated to the price of physical silver, much more so than any of the ETFs or even silver futures for that matter. Lastly, I want to touch on, I forgot to point it out when I was looking at the home builders. Check out lumber. I told you guys that this thing breaks the 50 moving average, it's going right back to 1,000, possibly 900 or 850. You do have this support here, previous all-time high at about 983, and that's where you're headed in the short term. So lumber, again, flashing some warning signs. Lumber to gold ratio, which the chart basically looks exactly the same as this, but lumber to gold ratio coming back in, and again, more risk off signals. But you know, these things can last for a while. When you're parabolic on the charts, it can last a while, and believe it or not, it has happened before. Look at we're looking at the transports here again. Look at how you got very extended back in 2014, and then on the monthly chart you pulled back a little bit, but I mean this pullback here is a big move. It doesn't look big because it's on the monthly chart, but it's a large move. And then you chopped around, and then you went into a bear for basically a whole year. So it can happen, and it will happen again. By the way, I don't know if you guys saw this. I just thought this was funny. This came up right before I was about to do this video, but Barron's made an article on teen traders are shaking up the nation, shaking up the stock market. So they're talking about some 16-year-old day trader, and I just had to pull this up from Fortune. Everybody knows about this. I think it was from late 1999 or early 2000, right before the tech bubble popped. But it's just, I mean, we all know the froth is out there, and it's just funny. I just saw this as soon as right before I was about to make this video. I thought it was funny to share. But you know, like Elon Musk says, if everybody becomes a day trader and nobody makes the stuff, then there is no stuff. So nobody wants to work, and everybody just wants to collect unemployment and trade stocks. Well, what do you think is going to happen to the price of goods? And now China's doing price controls because inflation is too high. I mean, this is the recipe for disaster. So macroeconomically, things are not looking good right now. But anyways, thanks again. Take care. We'll see you next week on the charts, and I should have that long-term gold chart forecast done. I'm trying to get it done by Monday, so while trying to get that out for you guys on my channel as well. All right, guys, take care. Thanks again.